edition of the London Session Open. Today is June 5th, June 5th, 2019. And my name is Alejandro Zambrano, Chief Market Strategist with ATFX. We're going to take a look at the markets as we usually do, and we're going to um, see what's going on. So we're not going to begin with the German DAX, rather we're going to begin with the Euro USD. So this is the EURUSD, and there's not a lot of activity here, but the dollar is lower against most currencies, in particular against the New Zealand dollar and as well against gold. Let me show you how that looks like. So dollar slightly weaker against the euro, up with about 20 pip, GBP as well 20 pip. Dollar yen, actually dollar yen is doing it positively, it's doing good there. And then here's sort of the biggest loser, New Zealand dollar. Sorry, against the New Zealand dollar. And then you have as well against the Canadian dollar, slightly lower. And sort of gold as well is doing good. So there's some activity, and that is in New Zealand dollar, USD, and gold prices. All the other ones, we've seen dollar weakness, but it's not necessarily very, very, very strong. So let's take a look at this. So Euro USD wise here, I think there's limited upside, as I've been saying for quite some time, because we are stuck in this wedge. And from a macro fundamental point of view, it's a bit of a tricky situation because the preferred pair that people trade in times of turmoil is to buy some yens. Um, don't necessarily buy euros. Both the European economy is definitely slightly weaker than it's definitely weaker than the U.S. economy. But what's happening lately is that people are sort of positioning themselves and sort of seeing lower economic growth in the U.S. and potential rate cuts, and that is why we're seeing weakness in the dollar. But here, again, the ECB themselves are supposed to outline a new TLTRO, which is funding, so cheap funding to the different banks in Europe, and that itself is a form of quantitative easing. So you have two economies sort of going in the same direction. There's not a clear discrepancy here between these two. So that sort of affects the technical picture and trading in general. Now, I think I don't want to overcomplicate it too much, but I guess if we trade above 13.27, we might trade slightly upwards. But you need to be very, very careful with these markets because this whole pattern here is extremely unreliable. And I think that you might have a bullish breakout and then a little bit push to the downside, um, and then you back in the range here. So my message here, if you can take a few days time, if you can take a few days off and just hit the beach or something like that, then do that because I don't think the euro dollar is going anywhere anytime soon. Now, this is the GBP versus the USD, which is also, unfortunately, not too much activity because of the big range we're dealing with here. So this is just a daily chart, and you can see how the market sort of went down, up, and we managed this little section here rather good, that little bearish momentum. And if you're looking at this now, I would argue that we're probably going to head back into the middle. And you'll see more bullish action on a break to 27.51. Take that out, which is the May 27th high. Then the market will most likely open up. Should be a few days of easier trading. Maybe if you look at something like the 4 hour when we have that break, maybe it could be enough to work with something like 26.39, just being bullish about that level. So the market goes up a bit and then goes down, and we buy that dip and then sort of try to ride this up to 28.66, maybe all the way up to 29.50. And then we'll see what happens. But most likely we'll be trading sideways within these levels. And then ultimately, in the long run, I do think we're going to go lower. Uh, because of the Brexit situation, like the Conservative Party is really pressured now to get Brexit, no matter the form. Most likely, some sort of no deal Brexit is back on the cards. Depends exactly who's going to be the new Tory leader. That I think is going to be resolved by the end of July. Uh, so, uh, but things will clear up actually much earlier than that because again, I have uh, the party itself is going to the MPs themselves are going to decide who they want to have as their new leader, and that just takes I think four weeks or so. What and then they sort of pretty much know who's going to be the next leader. But then this is put out to all of the members, will countrywide, and that's when it takes slightly longer time, and you need to add another 4 weeks there. So in about 4 weeks time or so, we'll know exactly, most likely, who's going to be the next leader of the Conservative Party. And again, if they're pushing for Brexit, which probably this what they're going to do, like a hard Brexit, then it will probably disruptive for the economy in the short term. And by short term, how long time does it take to establish a new trade deal? I think on average about 7 years. So it could be about 7 bad years. Isn't that a little bit like what they do? The stories in the Bible. I think it's 7 years. Yeah. So 7 bad years, and then hopefully maybe some really, really good years after that, as it usually is most of the time, unless of course you happen to be in a very, in some of the emerging countries where it looks like things never really improve. Um, Dollar yen, uh, the trend is bearish below 109.70, and you saw quite a big rally in the S&P 500 yesterday and in the Nasdaq 100, and in fact the U.S. stock markets continue to be bullish. I think we can go up to 108.84, and then potentially from here probably go lower. So I think we're gonna have that squeeze. You just need to be careful and see what happens when we squeeze up here. If everybody's just buying yen, then it's usually better just to wait and see until the buying tapers off, and then hopefully it'll taper off here, the buying in that sell zone, and then we'll revisit the lows. Because if you look at something like the S&P 500, the S&P 500 had a very, very strong day yesterday. In fact, it traded above my trend defining level, which was 28.05. And it sort of kicked me out from position, and also closed out my Nasdaq position yesterday. But this is still a downtrend, and yeah, okay, it might squeeze itself a little bit higher, but realistically, uh, you know, over the next few days and months, with the new tariffs now have kicked in, there's not going to be any improvement, unless, of course, the U.S. goes from literally saying, we're going to have a trade deal, and everybody sort of agrees, shakes hand, and then we start rallying again. But I think here, the way this is looking, and it's very clear right now, and unfortunately, that's the way it just sort of works with trading. You don't really know exactly. Like in 2017, for example, I had a very solid year. Stock markets also had a very solid year, and it was amazing times. But we are pretty much in a similar situation to what we've seen in 2015 and 2016, which is we have this large sideways trading. So imagine here, 2014 went all the way up, and then pretty much from here, I remember 2015 was just, from stock market perspective, a bit of a boring year. Then we had that decline, and then up and then down. But we literally got stuck here for about 2 years, and now we've been stuck here, because we are stuck in range here for about 1.5 years, and this will be resolved in two ways. It is just going to come down tumbling, because we have recession and an economic slowdown, or it's going to break to the upside. In the long run, I still think we're going to trade to the upside. In the short term, though, it's definitely going to probably be more sideways. And as I've been saying before, I don't really think it's going to be an easy year for most people. Um, you know, S&P itself was up with about 18%. I think right now it's maybe up with maybe 12% on the year. But given the way economic data has been developing, and given the way I think data will be developing, I think we'll probably be back at these levels down here at 2,600. So you're looking realistically at, maybe people will end up with maybe 5% return for the year or something like that. Yeah, there will be 3.8. So I think that's what's going to be. It's going to be a lot of range bound, and until we take out this high, guys, here, it's probably not the best time to be really aggressive in long stock markets. Um, what's also interesting by just looking at this, if we just do go down here and create what we call a right shoulder, then that could be something that could inspire a massive rally, but probably not until next year. So for now, in the short term, this it's a little squeeze. I think it's going to continue a little bit for a little bit longer. I think we're better off. It depends really how you want to deal with it, but the way I deal with it, it's a sort of simple system I used for many years, is what we call multiple time frame analysis. So we know that in the long run, the trend is bearish, right? So the market is, we should just look to sell. But in the short term, the market is bullish like it was here because it's creating these higher highs. So we just created this level here, and then I think we're probably going to go down. Not that we have to go down, but the risk reward ratios are better down here, and then potentially go up again. And then you see here when we stop creating these higher lows, now here the trend turns bearish, and then one can trade that, hopefully trade that little bearish and negative momentum there. So that is what I would look for. So I think probably down and then up and then probably lower again. But I would not sort of actively be selling here. I mean, you can sell if you want to, but in my case, I shorted here and I got stopped out here. Um, Something that is also interesting is gold. So gold prices on the daily, as you know, we talked before I went on holiday. I said a break to the upside here should lift things upwards, which it has done so far. I think it go a little bit higher, and then I would just head for the exit and just book the whole thing as the whole profit here. You might keep a little bit if you really want to. If you look at the weekly chart, you have the different configurations here. If you're some people treating this like a head left and sort of double right shoulder. I'm just treating this like some sort of a wedge, sorry, some sort of ascending triangle. And even if I just treat it like ascending triangle, you get like this potential rally of $221 per contract, so 16%, which is quite a lot. But we need to take out that high. So probably what we need here it's probably more. We just need to take out the high, and then obviously, most likely, some recessionary signals from the economy. I think that would boost buying in gold, and because of the tariffs as well, uh, it's more likely that the U.S. is going to have higher inflation going forward, and that is what could be a good argument to buy some gold. Um, but we need to take out these levels, and I remember very, very well I think most of you guys remember as well, like here in January 2018, when the market was very close to trading upwards, and I was saying the same thing I was saying now, but we never traded upwards. Um, and then here in February 2019, this well looked it was going to go higher, but it didn't really succeed. Um, right now, it looks like the stars are aligning themselves, and it looks like we could have that break. However, again, sort of we need to be realistic. We need to temper our expectations. There's not a lot of activity in the markets in general. So probably booking profits up here is probably a better opportunity. Now, if you want to get involved, there's not always a very good day to get involved in any market, unfortunately, because you need to have the trend, the risk reward ratios to your favor. And if you use some other strategy, again, there's certain conditions, um, which means that like up here, I would not be buying here because risk reward ratio here is not good. We still need a bit of a pullback. I'm not sure we're gonna pull all the way back down to the breakup point, but for now that seems reasonable. We have a low here, and where's that other low here? It needs to be created here. And at one point, if this does not actually trade, if this just continues to go upwards, as you probably guess, when everybody sort of decides to go along and the weak hands go along here or buying what it's doing now, then what is going to happen here is actually going to tumble. So that's actually quite interesting actually. And sometimes what happens is that if we don't have pullbacks, if the market just goes crazy like this, then you don't really have a sustainable trend eventually. You need a pullback to let people in. Um, So this is sometimes a bit greed and fear just pushing prices upwards, and that greed and fear is not really good base to create a very strong trend. Um, Crude oil prices. So things turned sour really quickly here. As you know, I've been bearish on the break from here, and then we had that corrective move, but I don't think we went all the way up to the actual sell section, so we couldn't sell again. The only sort of best entry was here in May. And then the market tumbled, And you just need to be realistic here. You know, people been selling up here. The market's down with about 11%, which is quite a lot. Fib wise, from the low to the high, we're pretty much at the third fib almost. So this is a significant decline. Stock market is slightly upwards, and it wouldn't surprise me if I actually go up a little bit here, maybe all the way up to the third fib. But then from here, I think people are gonna look to sell again. Now, look this from a big picture perspective, and unfortunately, it's a little bit boring, like you know, U.S. stock markets and the euro dollar and GBP. Again, it's just sort of trading sideways, and I think maybe eventually, let's see what happens over the next few months, but maybe down here, it's gonna be a range play again, looking to buy at the lows, targeting the middle. But for now, we need to work ourselves down to that low. Finally, German DAX. So this is the German DAX. So the German DAX is a very pattern-wise, it's not the best market to trade at all. Um, so you have that push to the upside, and I think here the market will probably roll over and go lower, but I wouldn't be putting my money here on this one. But the trend is bearish below 12,227. Sorry, 127. I think it might go down, up, but then potentially lower. Um, and then we just need to see what's going to happen here next. If it starts to take out the highs, of course, we turn bullish. But for now, it doesn't make too much sense to actually engage here. Okay, let's see if you guys have any questions. And as well, don't forget to uh, click on that like button. So if you're watching the presentation, please hit that like button. And don't forget to share. The more you share, the more I care. As well, let's see if you guys have any questions. Okay, so we have Swam. I hope I pronounced that correctly. Yeah, good morning. Good morning. And we have Marvin. Good morning to you as well, sir. So Marvin is asking, can we take a look at the Euro Yen or Aussie Dollar Yen? Sure, let's do that. Um, so the Euro Yen is bouncing. It's typical when you have bullish market or like bounce stock markets, we can go a bit upwards. What's interesting here as well is that the yen pairs actually moved ahead of stock market. So they started to move down lower before the yen, before the stock markets bounced. And some of them actually reached their targets. So was one of them. Break to the downside, opening up for a move. Here we pretty much missed the target with about 20 pip, 30 pip. I think this is clearly on a corrective mode, and I think it can go slightly higher. I'm not sure how much higher, but if you look at the 6 hour, you got these lows up here, which can act as resistance. So maybe here we can start to look for something, but I think here it's going to be much like many of the other markets. So you're in that uptrend. It's difficult to trade this move, by the way. It goes up, probably down, and then probably up, and then when we stop creating these higher lows, because I do think we're going to create a higher low. So we say this is a low, and then when the price slides below that level, and it just happens to be in this zone and below this high, then at that point I think we can trade lower because we're in this process here now, higher lows now, and we need to create that higher low here. This is most likely going to come at one point, and then depending on how the end, this is sweet because you have that little break here, and then probably here would have been a good spot to short sell with either stops up here or something different. And then you have that, which is the meaty part. Because these moves here, what's happening is that usually when you trade they're a bit difficult because these lows are very difficult to predict. And what happens here is that you usually have to wait. So say you enter here, and then you maybe trade this little section here at most, uh, this section here. at most. And imagine you get out at the exit, perfect exit, then that would be good. But if you don't get out at the perfect exit, you just get that little section here. So you need to cut off this section here and this section here. And it's even here with the downtrend, we miss out literally on this whole thing here. And then maybe at the end, maybe we'll get out. Maybe we missed this section, so we shorted here, and then maybe, I don't know, getting out for the sake of it. Let's say we just get out today, then at least we got this section here, and that's why I trade trends, because there's more pips here available mathematically, just this way it works. But for some reason, and I think that's the reason why like 70 to 80% of people lose money, is that for some reason they always try to buy these dips. You know, they always try to buy these dips. So for example, here I'm quite confident. I haven't looked at the numbers, but I'm quite confident that the majority of the market is still long. So they've been buying here and then probably bought more here and more here and then more here. So obviously on the way down, some people would get margin calls and then they never come back to trading. And then you have some people that are very happy now because they've been piling in and they're gonna go up. But as soon as they reach sort of the average price, they start to sell again, and then that pushes the market lower. But at the end, effectively, they make very little, if any, money. About the Aussie dollar yen. So the Aussie dollar yen as well, this one had a clearer and more clean pattern. And we share this one. I'd be sharing this one with you guys. And here you had this little rectangle. You had a fail rectangle, by the way, to the upside. I did try to trade this one. And you can see here, perfect touch of that target. So here we reached the target. So the different philosophies on how to deal with the markets. What I would do usually is that when the price reaches this target, you just forget about it and you look at something else. Now, for this market, it's probably going to squeeze itself a little bit higher, might even take out these levels here. I think, we're looking for a resumption of the bearish move and maybe some negative data to sort of kickstart that. So again, what probably is happening here is consolidation, and it's either just going to consolidate or it's going to correct upwards. And if stock markets continue to go upwards, obviously it's going to revisit its breakup point. So here again, we can make a decision. We don't have to trade alongside. We can just wait for things to align themselves with the main theme, which is bearish stock markets. So what you're looking for is stock markets trading lower again, and then yen pairs in general strengthening, and maybe on the break to the downside here, this could open up things. Because you're looking here at, this is a 115 pip range. So maybe one can get away with shorting here, put the stop loss on the other side here, and then start to target something like the flash crash low. And if you look at this from a big picture perspective, it's actually very interesting. Now there are cleaner yen pairs around, but you have this massive head and shoulders with a massive head, massive left, a massive right shoulder. And they do suggest that, maybe we're going to trade substantially lower. I mean, we already officially had that break. Let's change and look at the monthly chart. So here was the breakup point, and then target should be the 50 level. Now, just using like those trend lines like that, especially for a multi-year pattern like this one, is a bad idea. But maybe when we start to trade, so I want to add a horizontal level to it. So maybe on our break to 7224, that could be something. But we might be able to get an early start just because we know we can read the news, right? The chart can't read the news. The chart doesn't know what's going on. There's an idea that the chart knows everything and everything is priced in, but I don't believe that, because if the market really knew what was going on, then the volatility in the price would be much lower. Look at something like crude oil prices that just swings like crazy, just because people don't know. Nobody really knows. If people knew, it would not move the price. Like a best example is interest rates on bank loans. Like they literally never move until the central bank moves, and even if the central bank moves, usually don't even see a major effect on your holdings. The same thing with treasury bond yields. If you put your money in the treasury, irrespectively of which country of all the major countries, you will get your money back. And because you're gonna get your money back plus interest, that interest rate piece is usually relatively low. You're looking at 2-3% at most. So that is when things are really certain, right? But with other markets, the more volatile they are, like Bitcoin, is because people don't know. And we always need to remember that, because a lot of people think that trading is extremely easy and you can just sit there and churn money every day, but fortunately it's not. If it were, again, the volatility itself is an indication of that. And again, the volatility, if you know what you're doing, you can get profit from that volatility. Anyhow, uh, so this is the big level. And again, if we take out the lows, that could open up for further declines. Okay, it's 10 a.m., so I think we're gonna wrap things up. Um, and we don't have any more questions. So again, guys, don't forget to hit that like button. It's very straightforward. We have 8 people watching right now, and then just click here. I know that by the end of the day, we're probably gonna have 50 up to maybe 80 people that have watched this. And it would be amazing if we can have 80 likes there. It's very straightforward. The only way to access this is just to sign up. It's free. YouTube account. You can subscribe to channels like ours at ATFX UK, and you can also subscribe to other channels. This is a really cool way to sort of know to keep track of us. Because if you subscribe, let's just show you how it looks like. If I go to the BBC, so this is the BBC. Okay, so you click on subscribe, and then you click on that little bell button. If you just click on subscribe, it's gonna show on your home feed. This is not my home feed, by the way, but it looks like this. And then if you really want to have notifications when I go live and everything, and about every video, you click on that little bell button, and then you receive all notifications. Okay, guys, thanks so much for watching, and I'll see you guys tomorrow, same time here at ATFX in London. Thank you, and bye-bye.